Welcome back. It's down about 120 points for the Nifty. The mid-caps down by about two-thirds of a percent. The Nifty Bank down by about 0.5% as well. But the big story is the Insurance Amendment Bill. And as we speak about that, it has been tabled. What are the key proposals? What the outlook for the sector is and what the impact it could have on individual stocks as well as the sector at large. We do have Yash with us in the studio. Yash.
Well, Mangalam, it's been a 4 years wait, right? After it was first introduced, the amendments, and finally getting tabled today. And multiple changes came through in those 4 years. Finally, some very big reforms being tabled in front of the parliament today. I'll first take our viewers through those key reforms which have been tabled in front of the parliament. The first and the biggest decision, 100% FDI allowance as far as insurance sector is concerned, and this would be done through an automatic route, which means no regulatory approval will be required, no government approval will be required for a foreign entity, which could include foreign portfolio investors, to have a 100% owned insurance unit in the country. As far as the details under this are concerned, they'll be very crucial. What kind of board seats are given to Indian origin people? The second one, the Insurance Amendment Bill to allow merger of insurance companies into non-insurance companies. This has been a very controversial issue, specifically with respect to one company, the listed one, Max Financial Services, which has been trying, for the purpose of simplification of corporate structure, to merge Max Life Insurance Company, which is the unlisted life insurance unit, into the listed entity, which is Max Financial Services. But so far, Section 35 of the Insurance Act wasn't allowing that, and now it has been allowed as far as that merger itself is concerned. So big positive for Max Financial Services here. The third one, open architecture for individual agents. That particular element has been dropped, which means essentially agents won't be allowed to tie up with more than one life insurance company, one general and one health insurance company. They will continue to operate only with one of each category of businesses. We
will take that on board, Yash, but we do have a guest with us as well. Amit Jhingran, who is from SBI Life, joins us. It's a big CNBC TV18 exclusive. So, Mr. Jhingran, your first thoughts on, the Insurance Amendment Bill. What are the positives? What could have been better, according to you?
So the 100% FDI was the most anticipated thing, as the Honorable FM had already covered it in her budget speech. This will attract long-term capital to the country and also lead to technical upgradation, more innovation. And looking at the penetration level in India and the insurance density, I am sure that this will open up market further and will be good for the customer segment as a whole.
Mr. Jhingran, I want to come to you with a point which was closest to SBI Life out of all the amendments which have been tabled, and that was the whole idea on open architecture for individual agents. 28% of your new business premium comes through individual agents, and there was a risk that if these agents are allowed to tie up with more life insurance companies, there could be a risk of higher cost for you or losing out on business. That seems to have been averted. That seems to have been dropped. How big of a relief do you think would this be for business? What could have been the risk if this would have come through?
So all the provisions of Insurance Acts are as dear to us as an industry player. And regarding open architecture in agency, I will say that this step will create more number of people to take agency and will increase the employment potential for everybody.
Okay, 28% is where it currently stands as contribution to your company. Do you think now with this overhang being averted, do you think the share of individual agents in your new business premium would go higher? Because that generally entails a lower cost as compared to banca. Do you think that could now go higher as you would focus more on individual agents?
So we have been trying to improve our agency contribution to total business mix for last 2 years, and we have seen positive movement in this product mix in last 2 years also. And I'm sure that this focus of company for improvement in distribution mix will continue in coming years.
Okay, one question, Mr. Jhingran, as far as composite insurance license is concerned, that has not come through. Of course, this was a revolutionary move. It would have come through, but doesn't seem to find a place. Where do you stand on this argument? Is it positive? Is it negative? Do you think this could have increased penetration and we've missed a chance here? The government has missed a chance to introduce composite insurance license?
As a company, as a subsidiary company of a bigger group which also has a general insurance subsidiary, this particular thing was not on our radar. So as a company, it doesn't affect us at all.
Okay. Mr. Jhingran, there have been various steps which have been taken to bring new players in. Of course, the biggest one is 100% FDI with new large players coming in. The net worth requirements have been reduced to bring smaller and niche players into the industry as well. I mean, considering the largest private life insurance company with a large market share, do you think somewhere 4 years, 5 years down the line, it could create, more intense competition in the industry for a player who's been commanding a leading position and could lead to, some sort of loss of market share for you as well?
As I said in my opening remarks, the kind of insurance penetration that we have in India and the insurance density that there is, the pie is so big that more number of players coming in will further open up market. As you yourself said, there may be players who will like to cater to niche segment and all. And I am sure that expanding market will definitely be good for the industry as a whole.
Mr. Jhingran, one more point as far as investment regulations are concerned. Authority has been given empowering the regulator. How? I will tell you. For life insurance companies, about 50% has been allotted when it comes to central government and state and central government securities. And the balance 50% of investment, the authority has been given to IRDAI, which could make the regulations. Now, in all scenarios, one could imagine that insurance companies might ask for higher investment allowance when it comes to an asset class like equity to increase the returns for their policyholders. How big of a positive could this be for a company like SBI Life? And how could the investment scenario change with this change coming through?
There are there are so many areas where the IRDAI has been given more power, and we will be studying the provisions in detail in coming time and will interact with the regulator for on all of these things.
Mr. Jhingran, just one final question as I let you go. There is one important provision which the government tables, and that is giving IRDAI the powers to cap commissions, to cap remuneration, and to cap rewards. One more adjoining thing with this thing is that insurance companies will have to submit details of expenses of management. How important would this be from a transparency point of view? Furnishing details, everything, how an insurance company spends, every little detail about it.
The regulator, IRDA, was already looking into the expenses of management, and the regulation about this had been changed around a couple of years back. I am sure that this step will bring more transparency and will create a better regulatory environment for orderly growth of the industry.
Thank you, Mr. Jhingran, for that very important conversation. Mangalam and Nigel, it's back to you.
Thank you. Right, thanks a lot, Yash, for taking us through with that conversation as well. We'll obviously keep playing bits of this important conversation, the big CNBC TV18 exclusive. The first time we got SBI Life immediately as we got what is likely to be on, the bill that will be tabled today, the Insurance Amendment Bill. So that is CNBC TV18 for you. Big, exclusive and always in depth. We'll